Every year, millions of non-resident Bangladeshis send money back home. Those remittances support families, pay for education, healthcare, daily expenses, and have become one of the largest sources of foreign exchange for Bangladesh. But what if remittances could do even more? What if, instead of simply being spent or sitting in a bank account, they could finance businesses, support industries, create jobs, and contribute to the country's long-term economic growth while still remaining fully accessible to the people who send them? And that is the idea behind Bangladesh Bank's latest initiative. I'm Tasneem, a relationship manager at Lion City Advisory, and in this video I will explain what the new Non-Resident Convertible Taka Account or NRCTA is, how it works, and more importantly, why this isn't just another banking product but a policy initiative aimed at encouraging non-resident Bangladeshis to become investors in Bangladesh's economy. On 23rd June 2026, Bangladesh Bank introduced the Non-Resident Convertible Taka Account for non-resident Bangladeshis. At first glance, it looks like just another bank account. Eligible NRBs can open an NRCTA through the offshore banking units of scheduled banks. The account can be maintained as a savings, current or fixed deposit account, earns market-driven interest, and both the principal and the accrued interest are freely repatriable abroad. The account also allows transfers between eligible non-resident accounts and can be used for legitimate local payments. So far, it sounds like a convenient banking facility. But if you read the circular carefully, the real story isn't the account itself. The real story is what Bangladesh Bank wants the money inside that account to do. Traditionally, remittances have been viewed primarily as household income. But with the introduction of NRCTA, Bangladesh Bank is encouraging non-resident Bangladeshis to take on another role, not just as remitters but also investors. The funds held in an NRCTA can be used to make foreign direct investments in Bangladesh or invested in the country's capital market through the prescribed investment channels. The deposits can also serve as collateral for loans, allowing NRBs or even their designated third parties to finance eligible personal or business activities in Bangladesh, subject to the applicable regulations. Perhaps even more interestingly, Bangladesh Bank has allowed deposits mobilized under these accounts to support financing for export-oriented industrial enterprises operating in specialized economic zones. These funds can be used to meet legitimate operating expenses such as salaries, wages, and utility payments with repayment made from export proceeds. In other words, the same remittances can now do much more than simply sit in a deposit account. It can remain a savings, earn interest, support investment, and facilitate business financing. And at the end of the day, both the principal and the returns remain freely repatriable. This reflects a broader shift in policy thinking. Rather than viewing remittances solely as a source of household consumption, Bangladesh Bank is encouraging them to become a source of investment and economic growth. Of course, the framework comes with important safeguards, but those are the operational details. The bigger story is the policy direction. Bangladesh Bank is not just introducing another bank account, it's creating a pathway for non-resident Bangladeshis to participate more directly in Bangladesh's economic development. If widely adopted, the NRCTA could help transform remittances from household support into long-term investment capital. For any queries or advisory support regarding Bangladesh Bank's regulations, foreign investment, or capital market opportunities, feel free to reach out to Lion City Advisory. We are here to help you navigate Bangladesh's evolving financial landscape. Thank you so very much for watching.